Good morning. Happy crash day, everyone. Wild markets, no doubt. Okay. So futures, as you all know, are limit down. And I guess that probably is going to hold after a few seconds after the market opens. So we'll just have to see where all this ends up. I think the good thing is the reaction that happened on Friday. And even though, the ETFs are lower here, so far the retracement into here, we'll see how far it actually goes as it opens. I guess it's got to open close to down here. And that's support. That's price support. So if it opens down at this level, right, just like we do every other day, forgetting the news, prior low, no chart. Oh, geez, I'm sorry. I was so enamored with Dan and my picture looking so handsome there that I forgot to put up the charts. Little humor in this day. So again, the futures are locked down, and we know that I'm just looking at the spiders here. I had my tea, Dan. I didn't even put honey in it, tell you the truth. Down here at 240. Right. So looking at the futures that trade overnight, right, we got a whole picture there, 2,400, a gap down to support. Let's forget the news. A gap down to support after a few jiggles. And again, things are going to be locked. I'm thinking anyway to be a buyer, at least a short term, move up, and we'll see. Maybe this market surprises us with a rally. I mean, you've got a drop of, I'm trying to hold my language here, but 30% in a 3 weeks. It's amazing, and down into a prior low. So we'll see if it holds here. Obviously, what the market is baking into the cake here is that earnings are going to be bad, right? Businesses are closing. How are they going to, make money? So that's being, as I said, baked into the cake here. It's a while before earnings will start to flow. I think Federal Express is tomorrow, and that will be some indication for the markets to absorb and I guess get the first punch in the arm. We'll see what all happens with that and what happens. But let's just go through these. They're all locked down. We have to, I guess, just go with the ETFs. So 174, right? Gapping down into the area of the prior low. Same thing. So one of the things to look for, which the markets like to do, is fake outs, right? What I call gotcha trades. And what that is, let me just get a drawing tool out here. What that is where the markets, they go down, right? 174, right? So they gap down here, they jiggle around, and they pop down, and they come right back up again. So that could be one setup to consider if it should happen, where it just blows out some of the early stops buying the gap down. And then the relief of that potential selling pressure, profit taking for those that would have bought here, selling on the way up, some of that gets eliminated by the blip to the downside, taking out their stops. So as we always say, as we're going through charts, is that they are a representation of what people are doing with their money based on their beliefs. So if we should see stabilization, and then, just as I explained, they're buying and then stop short term, right? So in the opposite point of view, we've got this big hourly rally that happened at the end of the day Friday, where longs are thinking, hey, this is fantastic. What's happening here? And the Fed hasn't even done anything yet. So if it opens up higher and the Fed does something on Monday, wow, is that a score? Well, they are not getting that. And of course, all those that were accumulating down here and with the, Friday rally are now holding losses. So, back to our little setup over here, should it occur, Well, not only will those that buy the gap down get slapped, by this moving down, those that even like us, if we were long this pattern, well, what are we going to do? Part of our method. Well, initially, probably, some would say a 5-minute low, that could be a little bit too fast, but a 30-minute low, letting it jiggle around for 30 minutes and maybe even little blips and see what happens. The 30 minutes really give it enough time to digest, what's happening here pre-market. And that's a much better reference point that should not be violated after 30 minutes. And should that happen, anyway, if we get this, let me just clean this up. I'm making a mess here. Let's just say that we get this and it comes back up. And at 10 o'clock, right, 10 o'clock reversal period, we are here. That should be a great place to go long. And of course, that 30-minute low should not be violated. So as always, we look at what is, we have our patterns, historical patterns, and then we see what actually happens. So, we've got, the Qs, could they come down here to 170? Of course, it's not that far away. And, if they should go down there, that's the next reference point to be focused on, right, as we look to the left to see that price is reversed from. So this is why we look at what's happening pre-market, see what is close support, resistance, the gaps, and so on, and formulate a plan as best we can as to the probabilities. Well, if this happens, I'll do that. If something else happens, I'll do it this way. And then we see how it all unfolds. All right, looking at a few others. Diamonds. Where are they? 206. Well, let's drag this little line down here. See, I took the prices away. Well, let's do like this. Well, 206 is probably right around there. Hold on a second. See if we can get. No, I can't even see him, and I didn't even put 206 there. By making the font smaller, I could get it. Anyway, we can do it this way. Trend line. All right, so let's just say I got it in the area, 30%. Right? So a 30% decline in 3 weeks is amazing. Historically, I don't know, maybe what is that? Maybe 1929. I don't know. I'd have to go back and look at the charts. Anyway, it's an amazing drop in a short amount of time. That's taken out that low, obviously. And as I went and explained in the advisory letter and in the videos over the weekend, there's a void below here. So what we want to see happen clearly from the bullish point of view is the Qs hold its respective level and start to move up and stabilize at some point, and that'll save the Dow. Same with the spiders that, they hold their respective level down there and begin to stabilize. And look, just remember, a break of a prior low, right? The concept that we call a greater than 100% retracement, when prices move from a reference point high and break through the prior low, which they often do, is exactly where the momentum stops and it begins to stall and reverse. So again, we'll see how it all unfolds. The Russell, right, 107, right? So 107, right? Breaking down here a little further to the downside, same story, breaking through the hourly consolidation that certainly looked like it was going to go higher. Look, we trade on charts, obviously, right? This chart said it could go higher. And now we've got this news-driven market where the Fed came out over the weekend. Maybe it was the right thing to do, to kind of whatever the reaction was, traders could absorb it. And the gap down, I think at this point is a healthier situation longer term than getting, a 10, 15% rally up. So we'll see, we'll see. What I'm hoping for, again, from the bullish point of view, is a gap down and at some point a nice reversal back to the upside. intraday. It is exciting, Neil. I mean, it's exciting, in times like this, because this is an insane drop going over the internals. They're like overcooked, right? Sometimes we say the internals are cooked. Well, they're burnt to a crisp here. The wrong way option trade is down here below 1.4. So, I think that at this point, institutions came in Friday afternoon. Obviously, some of them are selling here. The blood is in the streets. I got an email from a subscriber that works for E-Trade. He says it's pandemonium there. He said there are so many accounts that were selling naked puts, that were printing money, doing that in a bull market. They didn't adhere to stops. They're getting destroyed. He went on to say that he had one account over the last several years made $9 million. It's all gone. He said it's insane. And this fella who's a broker is telling me he's getting upset because he doesn't have time to do a day trade. It was kind of funny, but he kind of tells me what's going on over there. And that's one brokerage firm. And having owned a brokerage firm, I know exactly what they're going through over there. And these trading halts are for the brokerage firm to get a hold of what's going on there, close down clients' positions. It's not so we can all clear our heads, right? And so that they can get a hold on that and save their butts, because it all trickles down. Once those account is at zero, the broker becomes responsible. And then if enough of them happen with a broker, smaller brokers, and you got to be careful at a small brokerage firm. Once their money's gone, it trickles down into the clearing firm. So this is how, in the past, some pretty big futures brokerage firms got taken out in situations like this. All right. I suspect part of that, Fabio, is, look, gold is considered a flight to safety like bonds, and there's no safety here, right? Utilities are getting destroyed. They're also down 25%. Their gold was moving up. So people are saying, hey, my account is getting decimated here in stocks. Where can I pull some profits out to kind of ease the pain? Well, take the profits out of gold, which was doing well. But as I wrote, it was in the video of the letter, the miners were doing terribly while gold was still holding up and doing well. And now, the gold miners got destroyed last week. So you can have the normal kind of intermarket relationships that occur between gold and the dollar and oil and this and that. But in times of panic, which this is, some of those things just go out the window, right? Absolutely, they're getting margin calls. So they could be selling for margin calls related to other positions to raise cash. So again, the same thing. I don't know where my XLU is. XAU. Somebody help me here. What utilities? I have my symbol here. I thought it was XAU. Anyway, XLU. Thank you very much. Paying dividends. That's supposed to, be something that cushions the downside during a bear market. No, not this time. So obviously, no place to hide. And the good thing is that little video that I made pre-market and put it in Telegram. In the past, and one of the things I mentioned in that video, you go back to 2009, that they're all talking about this swine flu and billions of people that were affected. What did the market do in 2009 while those billions of people were getting sick and dying? It went up like crazy, because at the time, the market was prior to that was in a recession, and the markets had gone down. The yield curves had inverted at that time, and the markets were going down for about a year, right? And I don't know if I can squish this up enough to see. Maybe I can make it big enough here. Let's go to a weekly chart. All right, so the yield curve had already inverted. The markets were going down. And then in 2009, right about here, as it stabilizes and starts to go up, we have the swine flu pandemic. The market could not care less. However, this time they're in a tizzy. I don't think businesses were shutting down at that time, but the good thing is that the markets, the Fed, are anticipating, right, all this bad stuff that is happening, could happening, and they're ahead of it where these yield curves are turning more bullish. Yeah, they have a whole long way to go. I don't know that they need to get up there because we're not in a recession. Everybody's anticipating that, but I don't know that they need to get up here to these super bullish levels to stabilize the market. In any event, right, the right things are happening to stop some, as much as it's going to be possible, devastation financially. Right? Right, exactly. And you know what, James? The liquidity. And look, prior to this all happening, institutions were leveraged to the eyeballs, right? Sentiment up here above, not only above 0.8, but pushing through these upper envelopes as to how long option traders were. And this isn't just day trading, people that have, small accounts that are using options. No, this is institutions that they were betting that this market was going to explode higher. So they're so leveraged, and now they're all getting destroyed. You know what leverage does? Whatever the loss is, double it, triple it. They can leverage their accounts because they're professionals and licensed way more than the 4-to-1, right? 20-to-1, 30-to-1 if they want. So that leverage works both ways. And obviously now it's destroying. And I would be careful if you're at a small brokerage firm, just thinking, I've seen even big ones get shut down and go out of business, but you get your money probably, but could take a long time. Anyway, I think that's enough for me. I'll hand it over to Dan. Good luck, everyone, today, especially those in YouTube. Join us here in the green room.
All right, good morning. Yeah, what a gap down. I surely didn't predict that. And then the market gapping down after the Fed's bazooka, as they call it, announcement with interest rates and other stuff, trying to provide liquidity. It's a bearish sign, but yeah, we'll be looking for opportunity. Just like before, if we do anything short, it's just, definitely a scalp or day trade again. And I said in my video on the weekend that I totally was expecting a gap down because this is what we call an end of day rally. But I even put levels in on certain things. And I think I said 263, just eyeballing it here. See, it was a pre-market support. It was it was less than 50% eyeballing it. Then a 30-minute high, we would have been bullish. Yeah, Neil, I sent out a text already, and I put it in here too. Let me post it again. But yeah, that's our game plan. The liquidity is going to be horrible at the open. It's chaos. So that's not, we like controlled chaos with a liquidity and a pattern, but that's not going to be at the market open. So yeah, cancel every single trade in the weekend letter is just thrown out the window. Opens here, we did enter some put spreads on Friday on that rally, and they look fantastic. I mean, we did one here on the spiders, the 245s. I mean, think about that, folks. You know, we did it at whatever, 262, 3, whatever. $22 out of the money. You know, that was an educated trade. We have Apple, same thing. We did the 245. So they're both gapping in the money a little bit. Hopefully we get the scenario of 30-minute high and we get out of these. Spiders expire today. So I'm going to keep an eye on that because we're going to be nowhere near. I mean, we're nowhere near max loss, and with the high volatility, we can roll them further out of the money to Wednesday and get ourselves another big cushion. So that's what I'm thinking on the spider one. We have a couple naked puts that are way out of the money. Microsoft, we have the 125s for Friday. We have Hilton. We entered LUV. We did the 27.5s for Friday. But I was just watching the ticker, and you know, you can sort it on your platform, but the amount of, you know, what you think are big stable companies, there's so many of them getting whacked today. I mean, look at Bank of America down 20%. Look at that. For just crazy gaps. Citibank 41. Yeah, we're in VXX. Clint, yep, I'm in that too. We're short the 55.65. 30-minute high in the market. Excuse me, 30-minute high. This would be a great add. Great place to add. So, you know, like I said, I mean, you all can do whatever you want in your own trading plan, but ours is, like I just said there, we're not taking any of the weekend trades, or we aren't going to do anything with our opens. Just let things settle down. Greg mentioned this Tilray in the weekend video. Look at this thing. Remember, and I remember Greg a few weeks ago said somebody came out and gave it a downgrade to 0. They may be right. I mean, 0 means you're going out of business. All right, VIX right now. Well, it's obviously not going to be trading. It had a high of 77.57 on Friday, and that was the second highest in history, only second to the 2008 financial crash, where I was trading back then, of course, and I think it went up to 87. So Lawrence is asking me, can the VIX go to 100? No, it does not have a limit, Lawrence. And the reason is because it's looking at implied volatilities. So I don't know what the limit is. I really don't. And yeah, so we got VXX, but for this thing to be at $56, and it you know, over time has all of this drag. Folks, this is the only instrument I talk so confidently on. I don't talk in absolutes in the markets because I don't know, you know, I don't know what's going to happen. But with 99.9% certainty, I will tell you, over time, this will contract. It's the way it's made. It's like, it reminds me of Jessica, was it Jessica Rabbit? The Disney cute little character, really, you know, very pretty. And she says, I can't help it. I was drawn this way. That's one of my favorite lines. I was drawn this way. I can't help it. And so that's what the VXX is. He's like, I can't help it. I'm made this way. I'm made to go down. So this could be the absolute phenomenal 30-minute high in the market. This we'll be adding 30-minute low on the VIX. All right, did I answer everything? Oh, yeah, we also have a Disney naked put. We went way out to the $65 where naked puts. I mean, it's on all this support on the monthly. This is a price void. Could it go lower? Absolutely. But look at these overlapping bars right there. That is a lot of support at 65. And folks, that's for this Friday. We have 5 days to expiration. What did we sell that for? It's just, I mean, these premiums are just off the charts juicy. We sold the $65 puts. Here, this is a post I gave into the close. Look at that. In one day, we sold them for $1.63. And then into the close in that rally, they were down to 40 cents. Like, I said they're close half if you want. I didn't myself, or I think I forget. All right, let's just look at a few others here. FCell had earnings, no pattern. Look at that thing, 30 bucks on the monthly chart. Yeah, Hilton, we have just the travel industry. I mean, look at some of these airlines. UAL, I saw down 20%. They're getting whacked even more, I hear, in Europe, because I think they're banning travel also, some travel ban. I mean, this is historic times that we're in here. This thing gapping up 48 bucks. Anything gapping up like this, my take is it has to be something related to the coronavirus. I mean, I'm just glancing at, wow, I'm just looking at the Dow 30. Look at this carnage. Home Depot down $25. Wow. Apple down 35. That's getting whacked more than the Qs percent wise. Let's see, IBM down 10. McDonald's down 19. Greg, did you see in Barron's they had talking about the speed of this decline? They had a chart showing speed, number of days to bear market. And they said, we went to bear market in 19 days.
And
Yeah, they said it. And then they just showed all the other times, how many days it took, even the 2018 crisis and the internet bubble.
I think
Yeah.
that's part of the main point. One of the main points in this market, even when I was talking about 2009 when it bottomed with the swine flu. I mean, you look at all other times where markets have gone into a bear market like that, it didn't turn on a dime and crash. It winds up slowly turning, some chopping at the high, you get a drop, and a retracement back up again, and then it starts to roll over, meaning it takes a little time of going sideways. It doesn't go up and all of a sudden the next day, fall off the roof. So very interesting time. Things can change. You think, is it different this time? Yes, it's different. But anyway, yeah, I think I mentioned that in one of our letters, Dan, but it's crazy. Three weeks down 30%. Wow.
Yeah, we're halting.
All right. We'll see what happens here.
I'll just go through a few more of these that I had on my interest list.